Hello there. My name is Rob Natali, founder of North Square Capital, and thank you for taking the time to watch this brief video on how the North Square Capital Debt Fund works. So for the process, the first thing that happens is you invest, your investment, minimum investment is 25,000 and can be into the million plus range. When you invest, our wholly owned subsidiary, Rehab Wallet, is going to be creating first positions and originating first position loans. Who we're lending to is professional fix and flippers who are rehabbing 3-bed, 2-bath homes, predominantly in the Carolinas, Georgia, and Ohio. So when you invest, your investment's not just into one individual loan, but diversified across the entire portfolio of 400 plus loans. So you have no single loan exposure. We are lending to these fix and flippers. We're providing them loans somewhere between 13.75 and 14.25%. And then what we're able to do is provide you a rate somewhere between 6 to 10% plus, depending on where you come in based on this investment tier here. You can either take a monthly distribution, you can do monthly compounding, or a combination of both. And it all comes with 90-day liquidity. This last section here where it says loan exit, this just talks about our performance since we started this fund back in June 2020. Current size of the funds is shade less than 120 million. We have originated over 2,200 loans, funded over $460 million in loans. $10 million have been distributed to investors, and we have never missed an investor payment. This other section here is I really want to highlight is the risk mitigation. How do we not only grow your capital, but how do we protect your capital? So as I shared before, these are all first position liens, first position loans on every single property. We require personal guarantees from our borrowers, and we also require title insurance on all the assets. We were pretty conservative loan to value, 65 on average to 72%. We go no higher than 75, and that's only for the most experienced fix and flippers. And these other bullets here below, one I already talked about. Your investment is not going into one loan, but it's diversified across the entire portfolio of 400 plus loans. And the way the portfolio is structured, we would have to have 200 loans or 50% of the portfolio to default in order for us to miss a payment to you. That's how much buffers that we have put in place for protection and enhancement of your capital. And lastly is we do not take in any outside leverage whatsoever, only investor capital. We don't work with any other banks. We don't have any folks telling us who to lend to, how to lend, when to lend. We are the bank. We're able to grow this fund in a very methodical, pragmatic way and put good loans out onto the street. A way to think of it is if you invest in the stock market and it's a publicly traded company, there are quarterly shareholder calls. More often than not, those companies who they have to answer to first before anyone else is the shareholder, even if that's not in the best interest of the company. We don't have any of that. Again, we control the entire process, soup to nuts. I hope that gives you a nice brief high-level overview on how the North Square Capital Debt Fund works. And as now you continue down in your journey here, you'll learn more about the fund, how we mitigate risk, the eighth wonder of the world, compounding interest, and if this is going to be the right investment for you. Thank you. Look forward to chatting further.